Hey everyone, Ark Invest here back with another video for you today. So in today's video, we're going to talk about why Roku is the number 2 and number 3 stock in 2 of Ark Invest ETF, in the ARKK one and in ARKW. We're going to see what Roku does, why Ark Invest actually believes so much in Roku, why I believe in Roku as well, and what it could mean for the future. Could this be a potential 5 to 10x? In my opinion, it could, and we're going to see in this video why that is. But before I do so, if you haven't subscribed to this channel, help me reach 6,000 subscribers by hitting that subscribe button. And if you like these videos, I appreciate an early thumbs up, as it really helps me out grow the channel and get my videos out there. So without further ado, let's start with the charts. Alright, so looking at the charts right now, we can see two support lines, one at 220 and one at 200. This 200 one is a major support line. I believe that if we break 220 in the next coming days, then yes, we could revisit that 200, but I believe this support is going to be very strong. So if you're planning on putting some buy orders there, put it at 200, 201 or so, because I believe this is going to get filled pretty quick if we ever reach that number. Otherwise, I believe the stock will go a bit sideways and then go all the way back up to the $240, $250 mark as well. But looking at the grand scheme of things, we can see that since the lows in March, which was $60, the stock has pretty much 4x since then. So for those that picked it up right there, pretty good performance if you ask me. And that's also why ARK's ETFs are performing very well this year, because they are picking up these types of stocks even when the market is not looking at them. But we're going to see in this video why this stock is going to be a great success. All right, so quickly looking at their Q3 2020 highlights. So total net revenue grew 73% year over year to 452 million. Platform revenue increased 78% year over year to 319 million. Gross profit actually exploded, was up 81% year over year to 215 million. Then we see some numbers that Roku added 2.9 million incremental active accounts in Q3 to reach 43 million active accounts. Streaming hours, I think, is one of the highest in the market, increased by 0.2 billion hours over the last quarter to 14.8 billion. Now, the average revenue per user grew to $27. We can see it actually right here. In 2019, Q3, it was $22.58. Now we're at $27 and we have way more users as well. So it's not only that they're increasing their active user base, but they're also increasing the average revenue per user. So usually you see sometimes that the user base grows, but the average revenue per user doesn't grow as well. Here we can see both of them are growing, and that's why it is reflecting on the balance sheet that is really positive going forward. All right, so now let's first talk about the first misconception about people that want to invest in Roku, is that they're saying, well, Roku has to compete with so many other streamers out there like Netflix, Disneyplus, Prime, Apple TV, etc. Well, let me tell you, it's wrong. Roku is actually the gateway to stream content on your TV. They don't have to compete with those guys. They actually enable those guys to enter somebody's TV. If you didn't know, 1 in 3 houses in the United States already has a Roku compatible TV, because most TV nowadays are smart TVs and they already have Roku implemented in that TV. 1 in 4 homes in Canada has it. They're already going into the United Kingdom and Brazil as well. Roku actually deals with software, which we're going to talk about later, and hardware as well. But hardware is just the first key to the puzzle. Hardware is just this thing like the Amazon Fire Stick that you just plug in your TV, and then suddenly your TV becomes a smart TV. Now, why is this such a success? Well, first of all, there is so much cord cutting going on in the United States, actually in the whole world right now, because cable TV is super expensive. I'm going to pull up a tweet from Nicholas from Ark, who actually says that Roku users who cut the cord said they saved approximately $75 per month. With an extra $75 per month, you could get Netflix, HBO Max, Disneyplus, ESPN, Hulu, Peacock, Amazon Prime, and Showtime. So if you ask me, I don't know why people aren't cord cutting more and more, but eventually everybody will cut their cord because they will see that value for money doesn't make sense. You pay so much for cable TV and it sucks, or you can pay less and actually have streaming content that you want to watch and like as much as you want. Now, another way to put it in simple words, what Roku is and what they do is basically they are a marketplace for streaming and for ads. Now the ad part is very important because that's the major part of their revenue and that's how they make more and more money, and that's what we like. So now let's go and look at those two ETFs. Right, so the first one is ARKK, which is basically their most popular one, with obviously Tesla number 1. Invite jumped to number 2 recently, and then you have Roku as number 3, taking that spot from Square. They actually have 6% in Roku in that ETF, worth 2.8 million shares and a market value of $667 million. And the second one, which is ARKW, has Roku as their number 2, again taking that spot from Square to 7.25% of the ETF, worth a bit more than 1 million shares and a market value of $238 million. So just by looking at this, you can see that ARK has big convictions in their investment in Roku, because if their two most popular ETFs has Roku in their top 3, they might have seen something most of the investors have not, and we're going to go into that right now. So you might ask yourself, how is revenue increasing? Well, there's two ways. One is obviously advertisement, and the other is subscription. Now let's first start with subscription because it's the most simple one. Basically, subscription is when somebody subscribes to Netflix or Prime through Roku, they take a commission. When you see channel recommendation on your Roku TV, that costs money as well, so they take a commission on that. And then there is also transactions VOD. You're basically buying video on demand from a specific channel, and obviously Roku takes a commission from that as well. And then there's also from the hardware part, which is basically the streaming companies buying buttons to put on the hardware. I'm gonna try and pull up a picture. You can see Netflix has buttons on most remote control right now. I think Hulu as well. So basically they pay for that as well, and Roku takes a cut from that too. And now let's talk about the ad revenue, which is the biggest part of their revenue. Basically, Roku has the largest TV data set for performance and measurement. They actually acquired a company called Dataxu. It's a bit like Trade Desk, which is going to be one of my next videos. So Roku reported that monetized video ad impressions grew 50% in the last quarter since they acquired Dataxu. So to simplify it, basically it's the same as YouTube and Google and even Facebook advertising is done. Basically, it's way more personal right now. Cable TV, everyone gets the same ads. Where if you're watching as a 12-year-old or a 25-year-old, you will still see those same lame ads showing on your screen. With Roku's data, advertisers can actually be way more specific in the ads that they show. So obviously their ad spending is going to be way more specific and probably get way more revenue from their side than they used to with cable TV. Now Roku actually took it one step further with the Roku channel. They launched it in 2017. Right now there's more than 10,000 movies, TV shows, news, etc. Roku actually controls 100% of the ad inventory on the streaming service on its own platform, which gives it a greater potential to monetize streaming hours than in other ad-supported services streaming on its platform, which makes total sense since they control everything on their platform, the data and everything. They can monetize it to its fullest extent. They actually made a huge deal with Kroger earlier this year to use its shopper data for targeted ads. Again, this is something that they made a deal with, and they are going to use this to leverage to other companies and get maybe more and more ads. As they have more ads, they can actually raise prices so that advertisers will pay more because they know that they are paying a premium price, but they are probably going to get premium customers in the future as well. All right, so to conclude, there are a couple of things you need to note. First of all, Roku's platform is growing each and every quarter like crazy. As their platform is growing, more and more active users, that means that more and more companies will likely spend more and more dollars for their advertising, which means that the average revenue per user will grow as well. And that will mean that Roku will make more and more money. Now, as more and more people cut the cord, there will be billions of dollars flowing into the streaming ad industry. More and more people are spending more money on streaming advertising than on this old school linear TV cable network. And then if you compare, let's say, Netflix market cap or even Spotify's market cap to that of Roku, Roku right now is at around about $30 billion. I think Spotify is just over $50 billion. and Netflix is over the $200 billion mark. Now, if you ask me, Roku still has a long way to go, not just by looking at its market cap comparing to other companies, but just because people are not paying attention to what is going to happen in the next couple of years. There's going to be billions and billions flowing into the streaming ad ecosystem, and Roku, in my opinion, is going to be the leader in that. Obviously, there are other companies doing the same thing, but again, Roku is the number one if you ask me, and if you ask Ark, I think they will agree with that as well. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you're holding Roku in your portfolio, let me know down in the comments below. And if you haven't subscribed to this channel, hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.